For more, we welcome back our friend and CEO, Connor Flynn. Connor, welcome. Good to have you with us.
Nice to see you, Tyler.
So nice quarter here. Everybody seems worried about commercial real estate, but not about you and the sector you're in. Why is that?
You know, it comes down to fundamentals. I think when you look at supply and demand right now, there's been over a decade of virtually no new supply, and demand is very, very strong across the board, not only for the anchor spaces, as we saw with Bed Bath & Beyond. We replaced multiple Bed Bath & Beyond spaces this quarter at 31% higher rents than what they were paying before. And then on the small shops as well. That's one of my big takeaways this quarter, is the strength of the small business, which is really, you know, the lifeblood of the U.S. economy. That continues to reach near all-time high occupancies in our portfolio, which is a good indicator of, again, the small business environment of many new businesses opening in our shopping centers.
What kinds of retailers went into those rather big box Bed Bath & Beyond locations?
You know, it's amazing that the diversity of demand is incredible. When you look at the tenants that we executed leases with this quarter, it was many off-price retailers, so TJ Maxx, Marshalls, Home Goods, HomeSense, Burlington, Ross, Nordstrom Rack. You also had groceries expanding, so Trader Joe's, Whole Foods, Sprouts, Albertsons, Kroger. You've got crafts growing as well with Hobby Lobby. You've got sporting goods growing with Dick's Sporting Goods and their multiple concepts. It's really remarkable to see the health and wellness component, again, continue to expand. You've got fitness, you've got medical. It's a nice way the shopping center continues to evolve because it's really all about convenience. And more retailers as well as medical users want to be closer to where people live.
Yeah, that's very interesting. You know, that's an interesting point you make about the medical users. You do see many, many more of these Medi-Center or urgent care centers popping up in shopping centers like yours. Let's talk a little bit about higher interest rates and how, if at all, they have affected you. I note that you have very little or maybe even no debt coming due for the remainder of 2023, which I guess is good news. That means that you don't have to roll anything over into higher rate loans anytime soon. So how's it affecting you? How are those rates affecting you, if at all, and your customers?
Sure. Higher interest expenses is a reality across many industries, including our own. We're fortunate where we actually are at the lowest leverage the company's ever had. And we have no debt maturing this year, as you said, which is wonderful. That being said, next year we will have to refinance coming due bonds at higher rates. And we feel like we have ample amounts of liquidity to handle that. We sit with over $500 million in cash on our balance sheet right now, which is the most we've ever had. So we're in a position of strength when it comes to the interest rate environment. It's a reality we're dealing with. Fortunately for us, the fundamentals, again, the strength in demand, the growth in net operating income continue to be robust. And so as our interest expense rises with the refinancings, we should be able to push through that and have some growth as well in earnings as we look for higher same-site NOI growth.
I come away from our conversation here feeling two things. Number one, that you think the consumer is very healthy. That's one. And number two, the rumors of the death of retail stores was exaggerated.
We are in a new paradigm in retail, no doubt about it. It's become, I think, crystal clear post-pandemic that we were a net beneficiary of really what consumers went through in a very challenging environment. They want to shop locally. They want convenience. They want value. And you're seeing huge demand for those locations. Now, with virtually no new supply, pricing power is squarely in the camp of the landlord right now. And Kimco is really benefiting from that as multiple drivers, not just retail, but as we said, medical and other users are looking to get closer to where people are living. And that's really benefiting our portfolio.
Connor, looking at all the people behind you, it's clear that you run a lean shop. There is tell those people to get to work behind you. Connor Flynn, thank you, my friend. Good to see you.
Great to see you. Thanks for having me.
You bet.